Hi, Tim Bigham back again this week for Traders Exclusive, and post-Fed non-celebration certainly yesterday as the Fed officially put an end, at least for the time being, to their permanent open market operation, in essence quantitative easing. So they will still be out there not withdrawing liquidity, but certainly that veracity of adding liquidity in the market is at least gone for the time being. The market reacted somewhat negatively to the news, even though it was expected, as the market did fall on that. We're seeing kind of a back and forth day so far today. And I think we'll see that really for the rest of the year here, normally entering a fairly bullish period. However, given the fact that the Fed doesn't have our back anymore and the valuations are fairly rich up here, I really look for that kind of 2,000 level to hold as the high for the year, and also that kind of 1840 level that we saw on the big sell-off a little over a week and a half ago to be kind of the low. So range-bound 2,000, let's call it 1850, big range back and forth perhaps, but no real change. Volatility still somewhat elevated, so I'm looking to use option strategies really in this kind of market to capture what I perceive to be a somewhat sideways market, and it really comes to fruition where option strategies really outshine in this kind of market environment. So using rallies to sell out of the money call spreads, targeting that 199 and 200 strike on the SPY, and then on sell-offs targeting to the downside, that 187, 186 level on the SPY, and really looking for the market just bounce back and forth. On individual stock names, we saw Alibaba, which not too long ago was trading at $83, hitting 100 a few times, running into little resistance up there. We have earnings coming out, and Alibaba now valued at more than Walmart. So I think the rally's gotten a little ahead of itself here, so I'm positioning by selling out of the money call spreads that expire next week, using that 100 strike to sell, and then buying the 102 strike for protection to define my risk here. I just think Alibaba, probably given the fact that it's had a 23% straight up rally, may need time to digest here. And we're looking at, trading at about 45 times earnings, which certainly is not cheap. And speaking of the market overall, Goldman Sachs came out yesterday with their kind of look forward. They're looking for 2016 earnings for the S&P 500 to come in around $132. If you put a normal kind of 15 multiple on that, we are exactly where we are right now, that 19 kind of 60 level on the S&P. So, using a kind of historically, mid-range valuation, we have 2 years of going nowhere on the market. If you buy into the fact that Goldman's earnings forecast will be accurate, usually they tend to be a little bit rich. Usually they take those estimates down. So I think the market may have stalled out here going forward. Certainly without some added liquidity from the Fed, Europe, or elsewhere, it may be tough going forward. So selling rallies, buying dips, looking for really a go nowhere market for the foreseeable future. So great time to employ some option strategies. This is Tim Bigham, and until next week, keep those position sizes in place and those stops going. Take care.